Hey, I just posted in the room the ES Globex chart for the week, and it shows the progress from Friday. And you can see the lengthy consolidation we've had for 3 days. Dan and I, Lee, kind of noted that that was indeed a possibility. Typically we get, after a move, we get 2 days of consolidation, and then we get either a continued move up or a breakdown. It at least starts to reveal its hand. And we're on a third day here with really zero data. I saw that you guys were able to participate off some stuff off of the payrolls this morning. That's cool. Hopefully you guys made some money. But today could be a weird day. Thursdays are normally good opportunity days. This is going to be kind of weird because we could easily stay trapped here because of no data and nobody says anything out there in economic land, or we could actually make a move. So the key areas to note in ES is for any move up, we're going to be looking at the 25-26 and to go for a continued leg up. For any sort of a breakdown, we're basically ES. We're looking for a break under the 90 level.
And to just add, while we're on that 25-26, that's the call wall on SPX area too. So that's exactly the same.
Great. So you know what, folks, let's stick to our game plans of trading the edges. Let's not do the monkey in the middle. You're seeing how the level of patience that we take to wait for the setups for the trades. The risk reward gets outlandish if you're playing in the middle. I mean, unless you personally have got some little system where you see something. I don't trade that way. I know Lee has, his occasional, and Dan occasional, his readouts for a read, in the middle of a range, and that's cool. That's just not something I do. I mean, I sit and wait for it to come to me, and I'm willing to wait, and my patience is pretty strong. So that's what I'm looking at here. I'm going to flip over to the SPX chart so you guys can get a sense of the levels here. So on the SPX, we're looking, basically it's that call wall Dan's talking about. It's SPX 5200. So that's what that is. ES correlates to 52, 24, 25. So you're talking about right in here. And then the breakdown would be under this. Let's see, 20. Yeah, the breakdown would be right down in here. So we're actually, let's see, where's ES right now? So ES, so we're down a buck and change. So we're actually opening right in here. That's where, if SPX were to open, we're opening right in there. So we're opening right on the VPOG from yesterday. So we could trade up here. I mean, it wouldn't take much for it to kind of get up here and trade up to the 5200 area, and then it will give us some sort of help. So just be wary of the breakout trade, because of the lengthy consolidation. I mean, you could get faked out. I'm not a breakout guy. I would rather get up here, take a shot at a short, and then if we move north, I'd be inclined to wait for a little bit of a retrace and catch it, even if it's a retrace where it's 4 to 5 points above, with confirmations from NDX. So that's really what I would be looking at. Other than that, let's wait and let the market tell us what it wants to do. I will yield to you, gentlemen.
You brought up a really good point, and something that I should hit on is that more than anything, myself, David, Lee, less so than myself and David, we're mean reversion traders. That's that's what we do. We trade moves. We find an area where we think that move's going to stop, and we trade it back to sort of that volume point of control. That's sort of how we trade futures as a very broad way of defining it. Now, why that's successful is that 99.9% of days are not trend days. They're going to be some sort of rangy, sort of wide, some whippier than others, some narrower than others, but there's going to be some semblance of sort of a mean reversion trade at some point. And that's sort of, when you really think about it like that, the days that we tend to not do our best are trend days. And the days that we tend to do our best are days that have a good wide whippy range. And today, I couldn't agree more with what David said. Essentially, the gamma profile is the exact same as yesterday. We've got SPX 5150 to SPX 5200. It's that 50-point range. I'm not really all that interested in playing the middle of that range unless you're long right now and we're coming into this sort of supply area from yesterday where we met a bunch of resistance sort of at this 52.15 on ES to 52.18 area. I got a decent short yesterday at 17. Am I going to take that today? No, probably not at this point. Maybe a little later. We'll have to see what the price action says, but 5200 SPX, whatever that correlates to when we get the spread when we open. Damn right, I'm going to take a shot short there. On the bottom end, I would take a shot long. I probably would take a shot long at 96. I ideally would love to see like 83, 84. That would be my ideal area to try along. But this sort of in the middle, I'm going to be, my eyes are going to be looking at sort of single stock stuff off the bell, and I'll wait for futures to come to me. Can I grab the screen for a second?
Yep. You got it.
All right. Let me see here. Okay. Am I showing yet?
Not yet.
Okay, I might have to do the entire screen thing here. Okay. All right, try this.
There you go.
All right. So this script, and I've told you guys about this, and you can poo-poo it because it's sort of that Zach Morris guy keeps promoting it, but I'll tell you, this script for $20 or whatever it cost me, it saves me a hell of a lot of work. It does all of my support and resistance levels, which then I fine tune sort of along with SPX. And if I switch right to SPX, it'll take a second to populate here, but it will, that's the volume points of control that's popping up right now. But it will pop up with my supply and demand areas, my resistance areas, the daily low from yesterday, the daily high from yesterday, yesterday's low. It does all this stuff for me, which saves me a hell of a lot of time in the morning. So that's sort of, I'm looking at sort of see how the red and the green are overlying here. What that's showing me is that pretty recently we had a supply and demand zone flip. So we came up here, we got into this area of supply, and then we gapped up through it, and then it became demand. So we're riding this trend. I can't get all that bearish unless we break below this area that we've been holding as support now for 2 days after a gap up. So that's sort of my plan for today on futures. Single stocks, I haven't looked at a ton yet today. Carvana, I still like that head and shoulders. Amazon, I dumped. It's probably going to break out now on me, but bonds are a little interesting. I've sort of been looking at TLT and UB on the future side. Let me see if I can. I just got to do this. This is daily, but let me go to. Sort of an interesting spot here, and I can, you can see that sort of that area that's holding right here at 121.24. I sort of like this as a long area off this 121.24 to see if this can get back up to 124. So I'm going to be watching UB today. That's something I like playing when ES is shit. So that was something that caught my eye this morning. So yeah, it's in the script channel, and I think there's a link in there to it. So, but yeah, that's sort of a trade I'm looking at here is this UB maybe off this 122 sort of volume point of control here, and with a stop at like 121.20 somewhere down in here. And see if this can get a decent move back to like 122.25, this area from yesterday. So that's all for me. I'll turn it over.
All right, let me share my screen. Okay. Just to go over, basically the same stuff I went over yesterday. And the correlations and the various levels. Big picture, like I mentioned yesterday when somebody asked, I'm still long biased because of this. Nothing's changed in that. There's nothing in the price action that has said this is ready to break down. The two really key levels below that would need to hold to remain in that frame of mind is this 91.75, and then the 50-day moving average that's now, yesterday I think it was at 77, now it's at 51.80. And these other moving averages are sort of catching up too. So and again, like David mentioned, this 24 to 26 area is going to be sort of the key resistance today. If we break out over these levels, then I'm going to be targeting this this area here, 52, 53, 50, which is the 78 Fibonacci. So that's, if we break over that, which I guess is the 5200 SPX core wall, that's really the key area today that David and Dan mentioned. So we got to break over this resistance, and then we can sort of look at continuation. When we talked Monday, we said, looking left here and here, these were areas of consolidation. So it's not a surprise that we've been sort of whipping back and forth this week. It's proven a pretty decent tradable range. And if we can break out over here, it'll kind of open that up even more. So that's what I'm watching on indexes. I am actually long. I've been long since, I don't know, 7:30, kind of off of this 5200 area, and we've held this trend line. So I'm only in a quarter position, but we have some resistance up here at 17, and then up at this 24 to 27 area. So that's kind of where I'm targeting. On individual names, Tesla looks interesting to me. We kind of have a pattern set up here. This is a key pivot here, and there's a 38 Fibonacci above. So if we can get over this area and base, then we can move up, from the 175, up towards 180 and above. So keeping that an eye on that. Carvana, again, we've just kind of been grinding in this area. This is a monthly pivot level here, 112.60. That's kind of why we haven't dropped below it. It's a pretty solid level of support, which is why I said, we got to scale out yesterday. If we can break this just below, we have a 111.40, which takes us into the gap and then down to this mid pivot of 108. That's kind of really what I'm watching on Carvana, but I'm cognizant of this being able to pop back up off of this pivot support. Nvidia.
Did you show the 1 hour? And essentially my stop out on Carvana is if that 1 hour head and shoulders goes no bueno. I like that setup, and so I'm going to be a little patient because it's a whippy name.
What price is the stop?
Let me see. I had it up here a minute ago.
If you're looking at a head and shoulders, then this would be your area to stop out over 122.
Yeah, I think that's fair. What I'm probably going to do, and I'll probably do some. I did a heavy amount of scaling yesterday at that support area, the 113, 112 and a half area. Right. I'm probably going to roll out, looking at maybe June OPEX for the 100s, something like that. And have a stop sort of in that 120 range and let it churn here and build out this second shoulder and hopefully do an offering and do something scammy and shitty and pay me.
And in the short term, you just have to kind of look at the macro side of this. You know, we just had the jobs data came out. You know, and the reason the market rallied is because there's, I guess, more people unemployed means.
And let's call it what it is. I mean, the market rallied was 10 points. It's barely a rally. It moved back off of technical support. I don't look at this
exactly.
I don't look at this jobs report as anything. It's a nothing. It moved back off of a technical support.
But short term, we can see these moves. So.
Yeah, I guess. I mean, it's still the bottom line. We got a range, and I think is we got to wait for either the fringes and play the fringes, or wait for it to break and develop a trend higher. And I don't think we know the answer yet. It's sort of a wait and see.
So let me flip over to NVIDIA. I kind of was looking at this morning, identified this descending triangle pattern on NVIDIA, which typically is a bearish.
Your mic is getting a lot of feedback. I don't know if you're using your studio mic or something.
I think it was David, but he muted.
It was me.
Whoops.
So yeah, NVIDIA here is in this descending triangle pattern, descending wedge, whatever you want to call it.
Like one of my favorite setups.
Yeah. So I'm going to be watching that. It's typically a bearish pattern, but it can break either way. So just keep an eye on that. That's an interesting one to watch. Let me see. What else did I have? I showed Tesla.
What's that bottom area on NVIDIA? Like 892-ish?
895, yeah. And there's a wick down here to 890. But the 895 has kind of been, this is kind of where these candles topped out at. And
well, it's trading 906 right now.
Right.
Yeah.
Yeah, I have this 905 area is kind of, it's been a pivot over the, if you zoom into the yesterday's chart.
Yeah, what was yesterday's high on it? It was 910?
Yeah, 911, sure.
911. But look how many times we came up to this 905 area, so that's been kind of key. So the fact that we're over that now and we're kind of breaking out of this this wedge pattern, you know, we need to get away from it, maybe come back and retest it. But that's definitely something to watch. And that's really it. We were talking about Meta yesterday. I was looking at that. You know, this still has a gap to fill up to 484.32. And then there's the 50-day moving average up here at like 490, just below. So I can see that filling this gap and maybe even touching the 50-day.
Got another one for you. Rivian, after that earnings and drop, recovering all of that. That's a pretty bullish thing it did yesterday.
It is. I still have a little bit, but, you know, like runners basically. But this is coming up again to tap this 50-day. It kind of got over that, broke out, and then lost it again. So 1036 is the key number to watch today to get back over. If we can get over, then we got to take out this high. If it can do that, then
What's that level on that high?
It is 1123.
Yeah. I mean, that could be a nice move. What's that gap, like 15 to 18?
1365 to 1520.
Yeah, I mean that could be a nice little. I mean, I like, one of my favorite things, and you guys have seen me sort of after earnings reports, when earnings reports change the fundamental narrative of some companies, and the numbers dropped Rivian, and then I think you saw that there was a significant amount of either institutional, retail, both demand in that area when it dropped, when it opened, because it had pre-market earnings, or when the market was closed, the earnings, and it was down to $9 ish, I think. I mean, that's a significant retrace back up from 9 to closing at 10.27 yesterday.
Right.
That's a huge retracement on that, which tells you that there is demand in that price range.
Yeah.
And that's what told me yesterday, all right, this is a name I probably need to put in the Roth, because there's some significant demand down here. And quite frankly, I'm seeing a lot of them around driving. So, I mean, the combined with sort of just knowing, what things are becoming popular and seeing them out and about, I think that's a name that can be an equity swing in a retirement type account for the next year or so, and see where this thing can go. And if these Apple rumors are true, this thing can triple. I mean, I think what was it, $300 or something when it IPO'd? I mean, it was insane.
I remember,
so I mean,
I shorted it from like,
yeah, we were playing it on IPO day, and I think you shorted. I was long it, and we were arguing because you like Tesla, and I was long it, and obviously you were fundamentally right. But I mean, that was sort of in that EV craze when they ran Fisker up to $35 or whatever it was. So,
but they were losing like $300,000 for every car they sold. Now I think they're down to like $40,000 loss per car. So they're headed in the right direction.
I said it to you then, and I'll say it again now. The deal for the delivery vans with Amazon alone is worth a speculative long position in the name.
Right.
Especially at $10 when it IPO'd at $200.
So this will be the very first time that I'll touch the damn stock.
Yeah, I mean, if you go look at weekly chart from IPO, I mean, it IPO'd at, I think, 180, 200. It was the opening print on it. And so, I mean, the deal that they have with Amazon alone, with these delivery vehicles, is a massive deal. And now you're starting to see them out and about and driving around, and which tells me if you're seeing them out and about and driving around, they're producing and delivering a fair amount that you're seeing them on the road. So
what's the cost to replace the batteries, and what's the cost of maintenance on these things?
I don't know. That's a smooth question.
The batteries around, depending on the size, right now Tesla for their sort of mid-range battery is around 12-13 grand.
And what's the light? I mean, how often do you need to replace it? Is it like?
Well, my battery has 120,000 miles on it, and it's still. I've probably had about maybe 3 to 5% degradation.
All I know is that there's a city right around Detroit, Michigan, that overly committed to a bunch of damn EV buses. School systems started, and they all started failing, and they had an epic disaster on their hands.
I wonder who did Oshkosh build them, or was it someone else?
I you know what?
I think,
but that's a fact. That's a fact. So I think about that. If anybody can absorb and fund the maintenance, it's the likes of Amazon. So I certainly agree with that part. Okay.
I think Amazon looks at it as, okay, the battery goes, we just get a new one, and it's a
It's a fungible product.
Cost of doing business, depreciation, it goes on the balance sheet, and they can say, look, we have all these green vehicles, all of our whole fleet is electric, like they want to get it to, and I think that's just a massive deal. I mean, you have Amazon as your biggest shareholder. They're the biggest shareholder of Rivian, and B, your biggest customer. And that's a pretty solid endorsement in my book. Amazon doesn't invest stupidly very often. They have made some dumb moves in the past, but
basically on where the stock is trading and with the news, it's like if there's a shot to take a long in your long-term account, not to be redundant, this is a decent opportunity.
That's how I look at it, and I look at yeah, that's how I look at it.
All right.
So that's pretty much it. I do like Tesla long if it can get over this 175, 176 area. And then, back on the indexes, just kind of watch and see what happens. We're kind of in this range here. So again, the real move comes over 26 or below, 90 or really below 80. Because if we get below 90, we could flush quickly to this 80, which is a 50-day moving average. That's where the algorithms are sitting waiting to take along. So
I'm watching bonds here, UB back to 122.05. Sort of this 122 area is where 122.02 is yesterday's volume point of control. So I'm sort of looking at this as a possible area for a long with a stop sort of 121.20-ish. So I don't know, what's that, 11, 12 ticks?
On UB?
Yeah. So it busted out sort of on this jobs report here.
Right.
And now it's retracing back to that volume point of control with a sort of a nice little setup there. So I'm going to watch that off the bell. I haven't taken it yet, but I'm going to watch that as a possible futures trade.
Cool. All right, guys. Have a good day.
Everybody have a good day. Good luck. I'm going for coffee.
Chat.
Bye.